The system has screwed us all. Were you taught how to handle money when you were young? Before you made mistakes and before you made choices that were difficult to reverse. Maybe you're just starting out. Or maybe you're doing the research now to avoid the pitfalls that so many people fall into. If so, you're in the right place. If you're new here, my name is Belinda Scroggins. Welcome to my channel. This is the first video in a series of videos that are going to focus on the building blocks of personal finance. I'm a CPA with over 40 years of experience. I've worked with many small business owners and individuals to help them to understand the potential consequences of their financial decisions. I've delivered presentations to high school students and college students, and I'm here today to help you to understand, in basic terms, the meaning of these concepts so that you can make confident and intentional choices. Like anything else, making small improvements is the key. Nobody wants to live a life of no joy and no happiness, but to position your future self for success, you're going to have to make some sacrifices today. It will require discipline. The more discipline that you apply, the more quickly that you will become financially stable and comfortable. And isn't that really the goal? To be able to enjoy life to the fullest and to feel like you're on top of things and that you're the master of your own destiny. But only you can decide what that'll look like. I can give you the knowledge needed to make informed decisions, but you'll need to take action to make it happen. It's likely that no one taught you how to manage money. That's probably why you're watching this video. Or the people that did teach you maybe really weren't good at it themselves. My family was not educated in finance and we were poor. So I learned these things much later in life. And boy, do I wish I had known them sooner. The ideas that I'm presenting today aren't for investment bankers or MBAs. They're for young people just starting out, or people that have gotten themselves into a bad position and would like to figure out how to get out of it. They're important and necessary concepts for the average person to understand because they affect all people. However, they're not simple. And to understand them, it'll take some time and some effort for you to absorb them. So give yourself the time to review at your own pace, continue to educate yourself, and make wise choices. Regardless of where you are in your financial journey, I'm confident that you will find value in this information that I'm sharing. I guarantee that this knowledge will change your life. It will allow you to work the system instead of the system working you. So let's dive in and understand what a credit score is and why it matters. Think of a credit score like a report card. It's a numerical measurement of how you manage your money. The score is expressed as a 3-digit number, and it ranges from 300 to 850. And it affects so many things. It influences the interest rate that a lending institution will charge you for a loan, or even if they're willing to give you the loan at all. Landlords use it to measure the likelihood that you'll pay your rent on time. It affects your car insurance premiums, and in some professions, even your ability to get a job. Why would a company hire me as an accountant to manage their money if I can't even manage my own? So I cannot emphasize enough that establishing a good credit score and maintaining it is one of the most financially impactful things that you will ever do. Now, there are several credit scoring models, but the most commonly used is referred to as the FICO score. There are 3 major credit bureaus: Experian, Equifax, and TransUnion. And these are the companies that calculate your credit score based on data that they collect from lenders, collection agencies, and even public records. In addition to calculating your credit score, they also prepare a report that's based on the same data. They sell this report to businesses who will use the information to make decisions about doing business with you. And as you can imagine, this score can make or break you. There are many factors that are used to develop your credit score, such as, number 1, your history of repayments. Do you pay your bills on time? And if not, how often are you late? Number 2, available credit. This is called utilization. Let's say, for example, that you have a credit card that has a $5,000 credit limit. If you owe $4,000 on this card, then you are at an 80% utilization rate, meaning you're using 80% of your available credit. The higher your utilization rate, the riskier that you appear to a lender. So aim to keep this score below 30%, but to obtain the best credit score, it's best to be closer to 10%. Number 3, total debt, meaning how much do you owe on current loans and credit cards. These loans could be car loans, mortgages, and student loans. Number 4, recent credit inquiries. An inquiry is originated when you apply for a loan, regardless if you get the loan or not. And every application can temporarily lower your score, so it's best to space these out about 6 months apart. This also includes same as cash contracts that we will discuss in future videos. Number 5, the length of time that credit accounts have been open. The longer that you're in good standing, the better. So what is a good credit score? 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. And greater than 800 is excellent. Most people start with an initial score in the 600 range, and it typically takes 3 to 6 months of active reporting to generate a formal FICO score. Not only does your score determine the interest rate that you'll be charged, but if your score is too low, you might not be able to get a loan at all. For a car loan or a mortgage, a bank usually won't approve a loan if your score is under 650. And you can obtain loans elsewhere with a score under 650, but you will pay a much higher rate for them. Once you've established a high credit score, you will get many benefits, such as a much lower interest rate than the average person can get. And I'm sure you've heard of 0% financing offers for automobiles. Well, you're not getting that unless you have a score in the 800s. I recently read an article that stated that 50% of people on dating apps wish that they could filter prospective matches by their credit score. So if you've never established credit, then how do you go about doing so? That's our next topic. It can be difficult to establish credit when you are just starting out. However, it's not impossible. Let's talk about a few options. Number 1, you can ask someone to co-sign a loan for you. This person needs to have good credit. It's risky for them to do this because they will be legally responsible for the loan if you do not pay it as agreed. Also, if you make late payments, it'll negatively impact their credit score. So if someone's willing to do this for you, don't take it for granted. They are really sticking their neck out for you. And you should also keep this in mind if someone asks you to co-sign a loan for them. Number 2, you can apply for a secured credit card. This is probably the best option. Most banks can set this up. They will require you to provide a small refundable deposit, usually between $200 to $500. That'll be your credit limit. Then you should begin using the card by charging small amounts on a regular basis and then paying them off in full each month. After you do this for a while, you can then ask them to upgrade to a traditional unsecured card, and then they'll refund this deposit and you'll have a credit history. So now you're likely to have heard horror stories from family members that have gotten themselves into unmanageable debt due to irresponsible use of credit cards. People that have fallen into this trap often will say, they'll warn you that never get a credit card. This is where the discipline and good financial decision making come into play. We will cover this topic in depth in a future video, but for now, we're just going to talk about how to establish credit. Number 3, you can become an authorized user on someone else's account. So a family member or a friend that has good credit rating themselves could add you to their existing credit card account. You don't even need to use the card. The account's history will begin to appear on your own credit report. Number 4, you can obtain a credit building loan. This is a type of loan that is primarily available at credit unions, and the amount that you borrow is held in a secured account while you make monthly payments. During this time, you do not have access to the money, but once the loan is fully paid, the funds will be released to you, and now you've established a payment history. It is really important that you make these types of payments on time. Thank you for watching. I hope you've gained knowledge from this video, and be on the lookout for future videos. Please leave a comment below to let me know what other topics you would like for me to cover. And please share my videos if you know people who could benefit from the content. So until next time,